The problem from this video can be downloaded at accountingworkbook.com. If you go to the website, click the PDF link and you can download a copy of this and all of my problems for yourself. Now, if you check the website and you click on videos, you'll see there are more videos than those I've listed publicly on YouTube. You can see that there's every problem covered in the workbook has either a public video or a members only video. If you'd like access to the members only video, just click the join button beneath the video player on YouTube. All right, let's jump into the problem. Let's take a look at problem 7.2a. This is us doing inventory records using the FIFO, LIFO, and weighted average methods. In this video, we're going to solve it using the FIFO method. So, Aberdeen Automart uses a perpetual inventory system and reports the following transactions for the month of May for one of its products, and there is a list of transactions, beginning inventory and purchase, sale, purchase, purchase, sale. And it says do an inventory record using the FIFO method. Under each of the methods, compute sales, COGS, and gross profit, and do some journal entries. And we're going to do all of that. It says download the template that we're going to use at accountingworkbook.com. So let's just do that. We go to Accounting Workbook. If you Google Accounting Workbook, first hit there, accountingworkbook.com. Under Financial Accounting Videos, this is Mod 7. And inventory template used in problems. That's the one, and it's this Excel file. I've already got it open here, and the only difference between the one I've got open and the one you would open is I've copy pasted the problem into the Excel file. So there we are. Okay, let's get going here with problem 7.2a. Now remember, this template that I've provided, you may or may not get one like this in your class or on the test. It may or may not be provided, but there's not a lot going on here, and it's super useful just to be able to prepare it. So the section on the left is for the date. This section I'm highlighting now is anytime we make a purchase, we fill that in there. This third section is for cost of goods sold. So whenever I make a sale, I'm going to be tracking the cost of goods sold here, not the sales revenue, but the cost of goods sold. And the final column is a running total for inventory. So let's get started with the first relevant date, which is May the 1st. Now, what happened on May the 1st? Did I make a purchase? Nope. Did I make a sale? Nope. But I did have an inventory balance, 20 units that cost $3 a piece. 20 times 3 is $60. Okay, so we're done May the 1st. I'll put an underline underneath it, and we will move on to the next relevant date, which is May the 5th. What happened on May the 5th? I made a purchase. I purchased 5 units at $3.25 a piece. Now again, keep in mind this is all the same type of product that I previously bought for $3. The cost to me has gone up to $3.25. 5 times $3.25 is $16.25. So I didn't sell anything. I have no cost of goods sold. My total here, my running total for inventory, I have to say to myself, okay, I had $20 of inventory. Do I still have $20 of inventory? The answer to that is yes, I still do. So I just bring it down. I'm adding to it $5 or 5 units at $3.25 for $16.25. And now this is the key. I don't attempt to add these. I don't attempt to combine these in any way. I just say, okay, that's what I've got. I've got 20 units that cost me $3, and I got 5 units that cost me $3.25. That's it. May the 13th, I make a sale. What did I sell? I sold 22 units. Now, I have to say, which 22 units did I sell? And the answer is, well, this is FIFO we're doing here. So I sold the first 22 units. What are the first 22 units? Well, I must have sold all of these, and I must have sold, that's 20, I must have sold 2 of the 5, right? So I must have sold 20 units that cost $3 each for 60, and I must have sold 2 that cost $3.25, and that's $6.50. Leaving me, if I had 20, I sold 20, I got none of those left. I had 5, I sold 2, I must have 3 left. 3 at $3.25, and that's $9.75. Next. May the 20th. we make a purchase. We purchased 7 units for $3.55. Price keeps rising here. 7 times $3.55 is $24.85. I didn't make any sale on this day, so I had 3 at $3.25 for $9.75. Now I'm adding to it 7 at $3.55 for $24.85. Again, don't attempt to total this. Don't attempt a subtotal or anything. Just say, okay, that's what I've got. I have 10 units in total, 3 at $3.25 and 7 at $3.55. On May 24th, we make another purchase. We purchase 5 for $3.70. 5 times $3.70. Should be able to do this in my head. $18.50. See if I'm right. Yes, $18.50. I didn't make any sales today, so I had 3 at $3.25 for $9.75. I had 7 at $3.55. So I just bring those down, and I'm adding to it 5 at $3.70 for $18.50. Okay, May 31st, I make another sale. And actually, when we did our first sale, I don't think I spent enough time kind of just explaining it, but we sell 13 units, and we have to say to ourselves, which 13 units did I sell, right? I have 3, 10, 15. Now, the common mistake students make here is they say, oh, 13 units, $10. They go, oh, it's $130 in sales. That's true. That is our sales revenue. 13 times 10, $130 is our sales rev from that day. Just like 22 times 10 equals $220 is our sales rev from that day. But that's not what we're asking for. We're not asking for sales rev. We're asking for cost of goods sold. So the cost of the stuff we sold, well, we need to know which ones we sold. So FIFO says we must have sold the oldest units first. We must have sold these 3, all 3 of them, because we sold 13 in total. We must have sold these 7, and of these 5, well, 3 plus 7 is 10. I must have sold 3 more. I must have sold 13 in total, so 3 plus 7 plus 3 is 13. Those are the goods that I sold. So again, in this section, we're tracking the cost of the goods that we sold. So 3 at $3.25, we sold 7 at $3.55, and last we sold 5 at $3.70. Hello, it's Tony from the future. I hope you were yelling at your computer screen when I wrote 5 at $3.70 for $18.50. Of course, it's not 5 at $3.70. I'd said it right before. It's 3 at $3.70 for $11.10. So scratch that. And because of that, I'm going to do some calculations in the future where my error carries. Where there's an error, I'll print the correction on the screen. So right now I've printed the correction on the screen, like 3 at $3.70 for $11.10 instead of 5 at $3.70 for $18.50. In the future, you'll see there'll be block letters come up on screen when there's a mistake because of this error in my solution. So I hope that helps, and I'm sorry for the inconvenience. Back to the video. Just multiplying these all through, 3 times 325 is 975, 7 times 355 is 2485, and 5 times 370 is 1850, leaving me with just 2 units remaining, right? I had 3, I sold all 3, so I have 0 at 325. I had 7 at 355, I sold all 7. I had 5 at 370, I sold 3 of them, so I got 2 at 370 left, right? None of the other ones are left. And 2 times 370, I can do that in my head, it's 740. And there we have it. We have completed our inventory record. Let's put a line under this. Now, it wasn't asked for, but this is kind of an important number. This one I'm highlighting yellow here. This 740 is the ending value of our inventory, right? This number would be forwarded onto the balance sheet as our ending inventory, at least for this unit, right? For this product. Okay, so we've answered part AI using the FIFO method. Let's do part B. It says under each of the methods you prepared in part A, so we've done the inventory record, compute sales, cost of goods sold, and gross profit. Okay, our sales rev just comes from the question, and it's these items, right? These are our sales revenue. So our total sales revenue for the month is the units sold times the dollar that they sold for. So 22 times 10 is 220. 13 times 10 is 130. 220 plus 130 gives us total sales here of $350. So our sales rev is $350. Our cost of goods sold comes from the table. Our cost of goods sold comes from this column on the table. So just adding that up, if I highlight it, actually I'll just sum it up in Excel here, equals sum bracket, and just add up that column. And it's 120, so I'll write that in handwriting just to be consistent here. Our cost of goods sold, our COGS, is 120. Sales minus COGS is gross profit. Sales minus COGS, 350 and 0.00, I guess, 0.00 minus 120 is $230. That is our gross profit. That's how much money we made by selling stuff above cost. Again, it's not considering all of our other expenses, paying employees wages, paying utilities, but that is our gross profit on this deal. So that's part B in the books. On to part C, it says do the journal entries for May 24th and May 31st. A lot of times my students say, well, why don't we have to do all the journal entries? And the answer is, well, an accountant really would have to do all the journal entries. We're just doing 2 of them because if you can do these 2, you can do all of them. And, I'll explain this as I go. So May 24th, we make a purchase. We purchase $18.50 worth of inventory. So on that date, I'm just going to debit inventory for $18.50, and I'm going to credit either cash or accounts payable something for $18.50. There we have our debit and our credit, and we just have to date this May the 24th. Now, in some theoretical world, if I was asked to do it for May 20th, I would just put in the amount $24.85, right? And it would be the same entry, just a different amount, $24.85 would be the amount. And if I was asked for May 5th, debit inventory, credit AP, or credit cash, $16.25. The more interesting entry we're asked about is May 31st. And on May 31st, we do 2 entries. Remember, one to sell the product, the other to get the product off our books. So part 1, we're going to debit cash or AR or accounts receivable, credit sales rev. And the second part of the entry, we're going to debit cost of goods sold and credit inventory. So again, the first part is to say, okay, I got money coming in. How much money do I have coming in? Well, on May the 31st, oops, I hit the wrong highlighter. I was trying to highlight with my pen. May the 31st, my sales rev on May the 31st is $130. So let's put that in. Debit cash, credit sales for $130. Debit COGS credit inventory for this amount. The amount from our May 31st COGS. So 97, actually I'll sum this up, equals that cell G13 plus G14 plus G15, 975 plus 24 plus 1850. Oops, yes, I accept. It's $53. Let's just make sure we don't have any rounding issues here. I bet you there's some change there, and this cell is just rounding up. Yeah, $53.10. So 53.10 is our credit to inventory, 53.1, and there we have it. We've done the journal entries for part C. So we've solved 7.2a using the FIFO method. Hope this has been helpful to you in better understanding FIFO. In our next video, we'll try the same problem, but we'll do LIFO. Stay tuned. Bye for now.